I guess that's the answer to your question there. We've hit forward. Some people are going to join us, but I think maybe we'll get going to allow a lot of time for enough time for Benjamin's presentation and also maximum time for questions as people join us. So let's get started. And I'd like to welcome you to today's session, Boards and Bylaws, on transitioning to the new Ontario Not-for-Profit Corporations Act, or ONCA. And this session is organized by FONTRA and FUN, about who we'll describe shortly. My name is Jeffrey Levitt, and I'm a member of the Executive Committee of the Federation of Urban Neighborhoods, or FUN, and my co-host, Jeff Cattell. Jeff, can you identify yourself? Jeff Cattell, who I think is probably very well known to many of the people on this call, is the president of FUN and co-chair of the Federation of North Toronto Residents Associations, or FONTRA. And Jeff will be moderating through the question period after Benjamin's presentation. Our presenter today is Benjamin Miller, who I'll introduce shortly, and who will also do a land acknowledgement. So Benjamin, you can, I think, upper left-hand corner of most of your screens. Benjamin will also do a land acknowledgement, for which we thank him for that. I want to briefly let you know a little bit about the Federation of Urban Neighborhoods, or FUN. FUN is an incorporated nonprofit founded in 2001. It's a province-wide, volunteer-based umbrella organization of community and neighborhood associations. The objectives of FUN are to promote awareness of urban issues, undertake projects which will enhance quality of life for residents of urban settings, establish a resource base for information, share expertise, and represent the common interests of member organizations before public and private bodies, as well as to encourage citizens to actively participate in and become informed about community and civic affairs. Since its formation, FUN has been a strong and consistent voice on issues affecting neighborhood associations and civic organizations throughout Ontario. And I invite you to visit our website, excuse me, Urban Neighborhoods, for more information. Turning to today's session, the Ontario Not-for-Profit Corporations Act, or ONCA, is legislation near and dear, I'm sure, to all of our hearts, as we are all going to have to transition our nonprofits to ONCA, which is the provincial legislation which now governs our nonprofits. And we're really pleased to have Benjamin Miller on our call today to speak about what's involved in this transition process. Benjamin, him, is a staff lawyer at the Nonprofit Law Ontario Project of Community Legal Education Ontario, or CLEO, where he focuses on the legal needs of nonprofits. Over the past 4 years at CLEO, Benjamin has answered hundreds of nonprofit questions and developed an online interactive bylaw builder for the ONCA. Benjamin also works at the Ontario Nonprofit Network and has worked previously with the Canada Revenue Agency. Benjamin holds a JD and MPP from the University of Toronto and an MA in political theory from the University of Ottawa. Excuse me. I'm sure that you will find Benjamin's presentation to be very clear and informative. I know that I did when I heard this presentation a couple of weeks ago, and that Benjamin's presentation will really help you plan for what needs to be done to transition your nonprofit to the new legislation, the ONCA. I'll conclude by a bit of housekeeping here. The format of today's session is that Benjamin will give his presentation, and then there will be an opportunity for questions. And the questions can be put in the chat. Jeff Cattell and I will be monitoring, and or you can use the raise hand function and be unmuted for your question. And all registrants will receive a copy of the slide presentation from Benjamin and also a link to a Zoom recording of the session. And now with that, I would like to turn the session over to Benjamin.
Thank you so much. It's a pleasure for me to be here. It's always fun for me, but it's rare I actually get to work with fun itself. So I hope it will be as much fun for you. So my presentation will be in three parts. First, I'll discuss some of the new elements in the legislation, so what it actually says. Secondly, I'll discuss the process, the kind of steps that nonprofits may need to or want to follow to transition to the ONCA. And finally, I'll go through a list of the free online resources that CLEO has to offer to help you with this process. But a few things before we get there. So firstly, you've heard I'm from the organization CLEO, Community Legal Education Ontario. You may have heard of us. We're a legal clinic, part of Ontario's legal aid system. In contrast to other legal clinics that provide one-on-one direct services and advice, CLEO produces clear, plain language legal information and education. And we do so on a wide range of topics, including interests that may well be of interest to you, like housing, so tenant landlord rights, criminal law, human rights law, employment law, you name it. So I invite everyone here to check out some of our other websites like stepstojustice.ca. A few disclaimers. I am indeed a lawyer, and you know how lawyers are with our disclaimers. I have not one, but 4 disclaimers for you tonight. So firstly, this presentation is general legal information. So it's not legal advice tailored to your specific situation, because I don't know enough about your specific situation to properly advise you. All of this is general principles. Number 2, this is a high-level overview of the ONCA. So it's not meant to be comprehensive. For more information, you will see our website at the end of this presentation, and I'll give a few more resources where you can go for sort of next steps. The other thing I'll notice that this is a presentation about the ONCA. So there may be other laws that affect you. If you're a registered charity, for example, then you have the Income Tax Act to consider. So I'll talk in a few places about how the process is a bit different for registered charities, but by and large, this is just about the ONCA. Thirdly, this is about law and not about best practices. Just because something is legal doesn't mean it's a good idea. I'm highlighting options for you under the ONCA, but it's up to each organization to figure out for itself whether those options make sense given your situation. Finally, this is about law. It's not about your funder's expectation or your members' expectations or your donors' expectations. All of that is something you need to figure out as a community with them. So as Jeffrey mentioned, I very much want to acknowledge the land that I'm coming to you from, both on my own behalf and on behalf of CLEO and the other organizers here. So we acknowledge that since time immemorial, the land on which we live and work and call home, and that means in my case, downtown Toronto, has been the traditional territory of Indigenous peoples, including the Mississaugas of the Credit, the Haudenosaunee, and the Wendat, and is now home to many diverse First Nations, Inuit, Métis relatives. And I want to specifically acknowledge my privilege as well as my role in systems of colonization. And what that means for our conversation here tonight, as we talk about nonprofit corporate law, is being honest about the fact that corporations have been used as legal tools for hundreds of years and continue to be used as tools to avoid accountability for harms done as part of colonization. My hope is that the information you get here tonight is used to build more accountable organizations, more accountable to your communities in general, and to the Indigenous communities, nations in your area as part of the ongoing process of reconciliation. The second thing I want to note is that the governance norms embodied in the ONCA may displace alternative ways of governing your community that may be better suited to reconciliation. So if you feel a tension between your obligations under ONCA and how you're trying to be more inclusive and accountable in your governance, I would love to hear questions about that. Finally, I will note that CLEO staff are in an ongoing process of improving our information by sensitizing it to the experiences of Indigenous peoples and better reflecting the wisdom of Indigenous peoples in our teachings. So with that, I want to kind of, before we jump into the specifics of the ONCA, take a step back and reflect on the meaning of good governance in general and legal compliance in particular. And I'd like to do this by contrasting 2 sets of treaties that apply to the land where I am. On the one hand, we have the dish with one spoon treaties. These are resource sharing agreements between the Haudenosaunee and Anishinaabe peoples, primarily around the Great Lakes regions. And these series of treaties, which date back hundreds of years, are embodied in what are called wampum belts, pictured on the left. So these are intricately woven belts of shells. And the way they work in practice is they're brought to important events with a special messenger, and the belt speaks through the messenger, reiterating the terms of the relationship as embodied in the treaties, which is naturally an iterative process as the relationship grows and changes. Contrast that with Treaty 13, the so-called Toronto Purchase, the first attempt at which was made in 1787. Now, by 1805, the Lieutenant Governor of Ontario, of Upper Canada at that time, was so disturbed by its questionable legality that he had his staff go looking for a copy. They found one copy, I believe, literally in a shed somewhere, and it was a blank deed with signatures from other pages attached. Now, needless to say, this does not pass muster in terms of legality, and another attempt at a treaty was made in 1805, and it had its own issues. But for our purposes, I want to contrast the dish with one spoon treaty and the 1787 to 1805 experience. On the one hand, the dish with one spoon treaty reminds us that good governance is something fundamentally about the underlying relationships. It's an iterative process. It's not once and done. It's something that has to be manifest in an ongoing way in our practices. Contrast that with the Treaty 13, which is unfortunately much closer to what I often see from nonprofits, where legal compliance and good governance is treated as something you write down on a piece of paper, you file away, and you don't look at it for maybe 2 decades until somebody gets nervous, pulls it out, only to find what's written down doesn't at all reflect what you're doing in practice. So if you take nothing else away from this presentation, my big lesson and hope that you take away is this. What we're going to talk about in this hour is how to get your documents up to date, but that's just the beginning of compliance with the ONCA. True legal compliance is not just what you write down, but how you take what you've written down and actually manifest it in your practices. So some key terms that I'm going to be using, and so we should all be on the same page about the ONCA. So what's the ONCA? So Ontario's Not-for-Profit Corporations Act is the legislation that most nonprofits in Ontario are going to be regulated by going forward. So it replaces the Ontario Corporations Act. So if you were previously under the Ontario Corporations Act, in most cases now you are under ONCA. However, if you're federally incorporated under the Canada Not-for-Profit Corporations Act, ONCA doesn't apply to you. If you are a co-op, ONCA does not apply to you. If you are unincorporated, and in the pre-session survey, I did get a question from an unincorporated group, ONCA does not apply to you unless you want to become incorporated. However, I should tell you in this session, I am not going to be talking about the process to become incorporated. This session is geared towards organizations that are already incorporated for how they can transition. So this may not be the most relevant session for you. Governing documents. When I talk about governing documents, what do I mean? So there are 3 general types of documents I'm referring to. Number 1 are letters patent. Here's one lesson. Under the ONCA, letters patents are now called articles. So when I use the term articles of incorporation, I'm referring to the same document as your letters patent. What's a letters patent? It's the document that the government first sent you when you got incorporated. It includes information such as your purposes, your address, your founding members, and other special rules you may have included. That's the letters patent. We'll talk a lot about that. Number 2, your bylaws. You may call it your constitution, whatever you call it. The key thing is that it's the document that you developed. The government didn't send it to you. You developed it, and it contains your governing rules, like who's a member of your organization, when you have to have members meetings, how large is your board, when do you have to have board meetings, etc. And then finally, 3, some nonprofits may have policies. They may have codes of conduct, confidentiality policies, all kinds of policies that are more operational than about governance. We're not going to talk a lot about policies because ONCA doesn't really talk directly about policies. So when I talk about governing documents, I'm largely talking about the first two types of documents, the articles and the bylaws. Now, we're going to talk about three groups of people that are defined under the ONCA. The first is members. Members are the people who are called members in your bylaws. So if you're wondering who are our members, the first place to look is your bylaws or your constitution, which usually defines who the members are. If your bylaws don't define don't use the term members, then whatever title you use, it's the people who have governance powers, like electing the directors, appointing the auditors, receiving financial statements, attending annual members meetings, you may call them AGMs. Whoever those people are, they are the members for the purposes of the ONCA. Every nonprofit has to have members. So if you don't know who your members are and you have a question about that, I can address that at the end of this session. Number two, directors. Directors are elected by the members or they are appointed because of their office. That's called an ex officio director. Directors oversee the management of the nonprofit. So your board, you may also call it your board of directors. That's who I'm talking about when I talk about directors. Finally, officers. Officers are not the same people as directors. They may be the same people in some organizations, but those people are wearing two hats. It's two separate roles. They could be a director and an officer. What's an officer? It's people with specific jobs like president, secretary, treasurer. There's some specific tasks as opposed to directors who exercise their authority collectively when they vote on things. So why care about the ONCA? Here are 4 reasons to care about the ONCA and 2 reasons you don't need to care about the ONCA. Number 1, it's an opportunity to revisit your governance. We're going to be talking about those minimum things that the ONCA may require you to change. But beyond that minimum, if you haven't looked at your governance in a while, ONCA reflects a good opportunity to pull out your governing documents, blow off the dust, and ask yourself the question, do these rules still make sense for us? Number 2, some new things are possible under the ONCA that weren't previously possible under Ontario Corporations Act. There's new flexibility in terms of what financial review is necessary. There's new flexibility in terms of who can be a member, how the board is structured, etc. So you may want to take advantage of some of these new opportunities. Number 3, if you have funders, they may ask you, are you compliant with the ONCA? For them, it may be a signal that you have your act together, you're on top of things. That's not a particularly inspiring reason to care about the ONCA, but there you go. It's one among others. And finally, number 4, to avoid confusion later on. Before the session was starting, we were talking about, what's going to happen in 2026. Am I going to deliver this session again? Well, I'll tell you what's going to happen in 2024 on October 19th. For organizations that have done nothing, their rules, for the most part, are automatically going to change to ONCA compliant rules. So that doesn't mean your documents will automatically become correct. What it means is that your governing documents won't reflect what your actual rules are if they're non-compliant with the ONCA. So that's going to be really confusing. You're not going to disappear or anything as an organization. You're going to continue to exist, but you may not know what your actual rules are. So to avoid that confusion, you may want to take an interest in the ONCA sometime between now and October 19th, 2024. And I'll talk more about that timeline later. Here are 2 reasons that you don't need to worry about the ONCA. The first one is there are no ONCA police. It's nobody's job in the government to come kick down your door and ask you, are you compliant with your bylaws? Have you transitioned to the ONCA? That's nobody's job. The way the ONCA is structured is that the people who have the capacity to enforce the ONCA are your members and your directors for the most part. They can take you to court and seek all kinds of remedies. This is fairly rare because for most nonprofits, the members and the directors want the organization to work out. They can work things out without necessarily needing to go to court. So don't worry about ONCA police. The other thing, the other reason you don't need to worry about the ONCA is that it's not a major overhaul. It's more or less the same thing you've been doing. There are tweaks here and there that I'll highlight, but it will not upend an organization. It will not mean anything very radically different for 99% of organizations. So if you're worried, if you feel intimidated by the process, take a deep breath, and I would say don't worry, because it's largely the same thing. Okay, so with that, let's begin. What's new in the ONCA? I'm going to talk about three things. Number one, this new concept called a public benefit corporation. That's really the newest element of the ONCA. Number two, financial review standards. So who has to get an audit, when do you have to get an audit, et cetera. And number three, the Ontario Business Registry, which is the new technology that came online with the ONCA. We were talking a bit about it before the session started. So public benefit corporations. So it used to be that under Ontario Corporations Act, all nonprofits pretty much face the same rules. Under ONCA, by default, all nonprofits face the same rules, but some nonprofits face additional rules. So who are those nonprofits, and what are those additional rules? And I'm given to understand that a lot of you will not fall into this bucket. Nevertheless, I'll quickly canvass it just so you're aware in case you do fall in. So a nonprofit is a public benefit corporation if it's either a charity. So if you're registered, charities are often charities for provincial law purposes. So if you can issue tax receipts and you can receive money from foundations and so on, you would likely be a public benefit corporation. The other way that an organization can be considered a public benefit corporation is if in a given year it receives more than $10,000 either in grants or similar financial assistance from the government. That means the federal government, the provincial government, the municipal government, or an agency of government. And financial assistance covers all kinds of things. It covers lots of forms of COVID relief and so on. So that's something to keep in mind. It does not, however, cover fees for services of any kind. So grants or financial assistance are things you get not in exchange for anything. Or more than $10,000 in gifts or donations from sources other than members, directors, officers, or employees. So basically, $10,000 in gifts or donations from members of the public, people who aren't directly connected to your organization. And again, the idea this is trying to capture is gifts or donations are not fees for service. They're not money you get in exchange for some kind of good or service you're delivering. Now, people ask me, what about sponsorship? It depends. So this is where I will reiterate that this is not legal advice. This is general legal information. Sponsorship, depending on how the agreement is structured, can be a gift or donation, or it can be a contract in exchange for something. It all depends on whether the person who is advancing the money is entitled to something in return. Are they legally entitled to advertising space, for example? You know, that may not be a gift. But if they're giving money and it's just kind of in general, yay, we thank our donors, you know, that's much more like a gift. But it depends on the facts. So the way it works is that as long as an organization is a charity, it counts as a public benefit corporation. But if it's a public benefit corporation because it received $10,000 or more from one of these sources, then next year it counts as a public benefit corporation, and that keeps carrying over every year that applies. So what are the additional rules the public benefit corporations have to face? So number one, they face higher standards of financial review, and we'll discuss that on the next slide. Number two, they're limited in who they can distribute their property to when they dissolve. Dissolve means they end as a corporation, they cease to exist. So when that happens, first you have to pay off all your creditors, all the people you owe money to. And then if you have any property left, and property means money, equipment, you name it. Property is a very broad term. If you have any property left, the question is, who gets that property? And the answer for public benefit corporations is that it can only go to government, federal, provincial, municipal, or an agency of government. Or if it's a charity, registered charities with a similar purpose. Or if it's a public benefit corporation that isn't a charity, other public benefit corporations with a similar purpose. Finally, the last main set, the main rule that applies to public benefit corporations, but not other nonprofits under ONCA, is that they cannot have more than 1/3 of their directors be employees. And that includes ex officio directors, and that includes non-voting directors. In general, unless an organization is a charity, in general, under ONCA, any number of directors can be employees. For public benefit corporations, up to 1/3 can be employees. If they're a charity, then it's highly restrictive when an employee is allowed to be a director, because there are all kinds of conflict of interest problems and so on. When an employee is a director, they still have to follow all the same conflict of interest rules that other directors need to follow. Okay, now we come to financial review standards. I'm going to focus on the rules that apply to not public benefit corporations, because my understanding is that most residents associations, tenant associations are not. But if you have a question because you are a public benefit corporation, feel free to ask it. So by default, all nonprofits under ONCA are required to get an audit. Some nonprofits have the option of passing an extraordinary resolution to get what's called a review engagement. So I'll talk about what's an extraordinary resolution, what's a review engagement, and who has the option of using this process. So an extraordinary resolution is a resolution passed at a members' meeting. So it's something you have to do every year. It's not something you do once and then it always applies. Every year, right? It's passed at a members' meeting and gets at least 80% support from the members voting at that meeting. Or if it doesn't take place at a members' meeting, annually, what you can do is you can pass a written resolution that is supported unanimously by all the voting members. So they all have to sign on to it. So if an organization by default passes an extraordinary resolution, then it may have the option to get a review engagement. What's a review engagement? So I'll take a step back and remind everybody what's an audit. So an audit's where a public accountant comes in, looks at your source documents, that means your receipts, your invoices, and so on, looks at your financial policies, so your signing authorities, your checks and balances, that kind of thing, looks at your financial statements, like your balance, your asset sheets, and so on, and says, based on all this, I can provide reasonable assurance that your financial statements are a reliable reflection of your organization's financial position. That's an audit in broad strokes. A review engagement is a public accountant comes in, right? A CPA comes in and says, they look at your source documents, they look at your financial policies, they look at your financial statements and says, based on all this, I can tell you that your financial statements are a plausible reflection of your financial position. So plausible is not the same as reasonable assurance. It's just the accountant telling you they didn't see any red flags in their review. So a review engagement, also known as a financial review, is faster than an audit. It's cheaper than an audit. It's less intensive for the people involved in the nonprofit, but it doesn't provide the same level of financial review. Okay, so who can get what? Who has the option of getting an extraordinary resolution and not getting an audit? So for organizations whose annual revenue, and revenue is a very broad term, it's basically all the money you take in, with annual revenue under $100,000, by default, they have to get an audit, but each year they have the option of passing an extraordinary resolution and waiving the audit, and they don't have to get a review engagement. They can just do their own internal financial statements. For non-public benefit corporations whose annual revenue are between 100,000 and 500,000, by default, they have to get an audit, but they can pass an extraordinary resolution and waive the audit, but they have to get a review engagement instead. They have to at least get a review engagement. For organizations that are not public benefit corporations with annual revenue above 500,000, it's the same thing. They can pass an extraordinary resolution and they can waive the audit, but they have to at least get a review engagement. So one of the big differences between Ontario Corporations Act and ONCA is that previously organizations above $100,000 in annual revenue always had to get an audit. Under ONCA, for non-public benefit corporations, they never have to get an audit. At least as far as ONCA is concerned, they always have the option of getting a review engagement instead. The last thing I'll discuss in this section is the Ontario Business Registry. So this is the new online system. It allows nonprofits to look themselves up online, see that the government has the right address on file, has the right directors on file. This is very important to make sure that the government has the right address on file, because you're going to need the government to send you what's called a company key to the address that they have on file, in order to be able to access the full use of the system and make the changes that may need to be made as part of the ONCA transition process. So one of the first steps any nonprofit can take is to go on the Ontario Business Registry and search themselves, order a corporate profile, and find out if the government has the right address on file. The Ontario Business Registry also allows nonprofits to make annual filings. So any changes to directors, they can also make changes to their address, they can also make, etc. It also shares certain information with the public guardian and trustee. It does not, however, share information with the Canada Revenue Agency. So this does not replace the need to make annual returns to the Canada Revenue Agency if you are required to do so. I will point out there are lots of glitches in the Ontario Business Registry, so watch out. If you are having issues, you can send me an email and I'll share my contact info at the end of the presentation. You can also report the issue to the following email address: obrinfo@oba.org. That's the Ontario Bar Association. They are compiling all the problems people are having with the Ontario Business Registry, and they are systematically representing those issues to government. So now we come to the second section of this presentation: what steps do nonprofits need to take? So I'll go through 5 steps. So number 1, figuring out whether ONCA applies to you. We've already talked about this a bit. ONCA applies to organizations that are under the Ontario Corporations Act, and also most organizations that have their own special act. So if you're part of a group that's been around for 100 years, it's possible that you had your own act that was created just for you. Well, you should know, unless that special act specifically says ONCA doesn't apply, they both apply to you. In a case where an organization has 2 acts that apply to them, ONCA yields to the other act. The other act wins. So there's never a true conflict. I sometimes get the question, we're a charity, does it apply to us? The answer is maybe. Charity status is something separate. It's about the Income Tax Act, it's about trust law. ONCA, whether or not it applies, is about where you're incorporated. If you're incorporated provincially, there is a very good chance that ONCA applies to you. ONCA does not apply if you are federally incorporated under the CNCA, you're a co-op, you're a business corporation, or if you're unincorporated, unless you want to incorporate under the ONCA. So let's say you figured out, okay, it applies to me. When should I start acting? So I mentioned briefly the timeline. I'm going to give a bit more detail now. So ONCA took effect on October 19th, 2021. There's a 3-year transition period until October 18th, 2024. So what's happening in this 3-year transition period? Well, during this 3-year period, your old letters patent and your bylaws, they continue to be valid. As long as they were valid before ONCA took effect, they continue to be valid, even if they contradict ONCA. However, in cases where your governing documents, that is your letters patent or your bylaws, they don't deal with an issue, you're now looking to the ONCA for the answer, as opposed to before where you would have looked to the Ontario Corporations Act. At the end of the 3-year transition period, what's going to happen? So I mentioned earlier that most rules are going to automatically be considered to transition over, so your documents won't reflect necessarily what your rules actually are. What I'll mention now is there are a few exceptions to that. Certain rules will not change until you file what's called articles of amendment, which means you actively filed with the government changes to your articles. And The wording is a bit unclear, but it could be any changes to the articles, or it could be specifically any changes you make to these provisions in the articles. So what are the special exceptions that continue to be valid after the 3-year period? So number one, the number of directors on your board. Previously, that number would usually go into the bylaws. Now, ONCA requires that it be put in the articles. So if you, by the end of the 3-year period, haven't transferred that number into the articles, it's still in your bylaws. As long as you haven't made any other changes to your articles, don't worry, your board isn't going to dissolve. That number of seats on your board continues to be valid. Number two, member classes and voting rights. Again, under Ontario Corporations Act, the information about if you have different types of members and what the voting rights of each type of member, and you can have multiple types of members, and some can be voting and some could be non-voting, right? All that information would go in bylaws. Now, ONCA requires that information to be put in the articles. If you haven't done that by the end of the 3-year period, as long as you haven't made any other changes to the articles, it continues to be valid. Your membership won't disappear. Number three, your dissolution clause. Dissolution clauses are lines in your governing documents that deal with what is going to happen to your property if you ever dissolve. ONCA requires that it be put in the articles. If it's in your bylaws, it's the same kind of thing. As long as you haven't made any other changes to your articles, it continues to be valid past the 3-year period. Note, if you're a public benefit corporation, the rules limiting who you can transfer your property to apply to you. And so you may want to be careful, is your dissolution clause consistent with those rules? The broad takeaway here about the timeline is to avoid confusion, transition sometime in the next 3 years. Okay, now you figured out we want to start transitioning. The first kind of organizing step you can take is to make sure you have all the documents you need. So I will very quickly go through some of the documents you need. And you know what? It's a good idea to know where these documents are, even if you're not immediately getting into compliance with the ONCA. So number one, knowing where your letters patent is, also your supplementary letters patent. A supplementary letters patent is if you ever filed changes to your letters patent with the government, the supplementary letters patent is the file that they sent you back. You need both your letters patent and your supplementary letters patent. You need to read them together in order to know what your rules are. Number two, your bylaws, also known as your constitution, your governing rules, your minute books, and nonprofits are required to keep board meeting minutes, board committee meeting minutes, members meeting minutes, and member committee meeting minutes. That last one, a lot of nonprofits don't know. You can keep these records virtually. You can even keep them on the cloud. That means like Google Drive or Dropbox, something like that. That's all allowed. Special resolutions. What makes that resolution so special? So these are motions passed at your members' meetings that required at least 2/3 support. Usually when you're making a change to your letters patent, it's going to require a special resolution. So it's important to know the contents of those special resolutions in case you passed it, but then forgot to file it with the government or something. Directors and officers register. Under ONCA, nonprofits are required to keep 6 years worth of a list of their directors and their officers. The list needs to include the names, the start date, the end date if they're a former director or officer, the physical address that they agree to receive documents at. If they agree to receive documents electronically, their email address. Okay, those are the 5 bits of information that you need to keep on the directors and officers register, and you need to keep 6 years worth of information. Director consent forms. ONCA requires that in order for directors to officially become directors of an organization, they have to consent in writing. It doesn't need to be a fancy form. It just needs to be, I so-and-so agree to be director of X organization as of X date, and you may want to include that director's address so we know who we're talking about here, and a signature at the bottom. I get lots of questions, you know, do codes of conduct count? Do confidentiality forms count? Do nomination forms count? In principle, all these things could count as long as they have that crucial information. What doesn't count for this purpose is minutes from the meeting where they were elected. because the key thing here is they need to sign in writing. Minutes just record that a vote happened, right? They need to actively sign somewhere. And yes, a template exists. You can go to the Ontario Form repository and Google consent to act as direct, not Google, search consent to act as director. They have a form called consent to act as first director. If for all intents and purposes, this is basically the same, right, like the same wording, except it's not just first directors, it's any directors of the nonprofit. Nonprofits under ONCA are also required to keep a members register. So again, register is just a fancy name for list. It's got to be, 6 years, their names, their starting time, their ending time if they're former members, their physical address, and their email address if they agree to receive documents electronically. I received a question in the pre-session survey. Our membership is defined as all the people who live in a certain area. We don't have each of their names. ONCA requires you to have each of their names. And the reason is each of them is entitled to receive direct notices of meetings. And so just posting it, for example, to a newspaper, which used to be possible for charitable organizations, that's no longer possible under the ONCA. Just posting something to social media, that's not valid notice under the ONCA. They need to be directly contacted. So it's important that the register be kept up to date of all the members of the organization. Finally, it's good to know your annual revenue, so you know, are we a public benefit corporation or not? And finally, I'll just reiterate, it's important that the government has the most up-to-date address on file. This is something nonprofits may wish to check. It cannot be a PO box. It needs to be a physical address. And again, it needs to be updated so that the government can send you the company key. Okay, what's the actual updating process for changing your bylaws? So disclaimer, your bylaws may say what the updating process is for your organization, in which case follow that. I'm just going to describe the typical process. The caveat is, no matter what, your voting members have the final say on changes to your bylaws and to your articles. Here's the typical process if your bylaws say nothing. So number one, your board approves the changes. Anybody can propose the changes to your board. It can be a committee, it can be a single director. You could hire a lawyer to do it. In general, I'll comment because people ask me, when do we need to involve a lawyer and so on. So it depends from organization to organization. But what I emphasize is that it's never all or nothing. There's lots of value to nonprofits themselves having a very active role in the changes because then the changes reflect the input of people in the organization, and the process of updating your bylaws is actually an educational process for your directors and your members. They actually know what's in the document, and that increases the likelihood of actually putting into practice what's in your bylaws, which, as I mentioned at the beginning of this, is the key to legal compliance. However, any organization is welcome to have a lawyer do it from the beginning or be part of the process or review what they prepared at the end before it's voted on. So the board can approve changes to bylaws. If so, those changes are valid as of the date that the board approves it, unless the motion says otherwise. Changes to articles, however, are not valid until they are filed with the government. Then the board approved changes are only valid until the next members meeting. So a members meeting needs to happen sooner or later to finally approve the changes to the bylaws. In order to have a valid members meeting, you need valid notice. That means sent to each individual member between 10 and 50 days. And your bylaws may say how long in advance, but if they don't, between 10 and 50 days ahead of the meeting. And the notice has to provide the members with adequate detail about what they're being asked to vote on, so they can form a reasoned opinion about what they're being asked to vote on. A quorum of members, that's the minimum number or percentage of members required to attend the members meeting, has to be present, at least at the beginning. The default quorum, if your bylaws say nothing, is 50% plus one. I wrote here 51%. That's a bit misleading. It's 50% plus one of your voting members. Then your members need to approve the bylaws. If your bylaws say nothing, to approve changes it's a 50% plus one, simple majority. To approve changes to the articles, it is a 2/3 majority, a special resolution. Once it's been approved internally, the bylaws do not have to be filed with the government unless you're a registered charity, in which case it does need to be filed with the CRA. They don't approve, they just need to be updated. All nonprofits need to file their articles of amendment with the Government of Ontario, and I'll talk soon about how to do that. So we've talked about how to change the bylaws and the articles. Now we're going to talk about what you might want to change in the bylaws and the articles. Here are 5 examples. It's not a comprehensive list. Number 1, you must appoint a chair. In the pre-session survey, I got a question, what officers are required to be appointed by the ONCA? So you no longer need to appoint a president or secretary. You still can, you're welcome to do that, but you're no longer required. You are required, however, to appoint a chair. The chair needs to be a member of the board. Other officers do not need to be a member of the board unless your bylaws require it. The chair does need to be a member of the board. Corporations are eligible to be members of an organization under the ONCA. However, the bylaws have to explicitly say so. So there are different reasons why a nonprofit may want corporations to be members. It could be a fundraising technique. It could be a way to build accountability to other community organizations. It may not be suitable for your organization, but it's now an option. The bylaws have to explicitly say so if you want to take advantage of this option. Number 3, if you have multiple classes of members, so that means you have multiple types of members. So in the articles, you specify that you have multiple classes of members and what their voting rights are. But in the bylaws, you say how to join each class, how membership in each class ends, how to withdraw or transfer between classes. That's what's required to be put in the bylaws. By default, members who control 10% of the votes in your organization have the right to issue a written demand to the directors to call a members meeting, and the board has to comply except in special circumstances. The bylaws have the option of lowering this percentage. So you can make this right more accessible. You may not want to if you think it'll be disruptive, but it's a possibility if you want to encourage this kind of participation by your members. Finally, by default, under the ONCA, voting members do not have the right to vote by proxy. Voting by proxy means the members have the right to appoint somebody to go to a members meeting on their behalf and vote on their behalf. So by default, members don't have this right. So if you want them to have this right, you have to actively say so in your bylaws or your articles. Anything that can be put in the bylaws can also be put in the articles if you want. Okay, so the final step, updating and filing your articles. So what might you want to change in your articles? So number 1, your purposes. Not because ONCA requires you to change your purposes, but because it may have been decades since you last looked at your letters patent and your purposes may be completely out of date. You may be doing completely different things. The terminology may have evolved. So it's not required by ONCA, but you may wish to update your purposes. If you are a charity, you need to be careful about updating your purposes in order to keep them exclusively charitable. That might be a very good case in which you want to consult with a lawyer who's knowledgeable about charity law. As I mentioned earlier, the number of directors now needs to be put in the articles. The minimum number of directors is 3. What's new under the ONCA is that you can state a range of directors. So you can say we have 5 to 9 directors, and then every year the board can pass a resolution saying this year we have 5, next year we have 6, what have you. Member classes and voting rights, I mentioned that now needs to be in the articles. And if you want to restrict your nonprofit's powers, so for example, you don't want the nonprofit to be able to sell a key asset, or there's something you don't want your nonprofit to ever be able to do, that needs to be specified in the articles. To actually file the articles, there are 3 methods. 1, through the Ontario Business Registry, 2, sending it in by mail, or 3, filing through a third party. And the third parties are specified on the Ontario Business Registry website. If you want to file something through the Ontario Business Registry, you need 3 things. Number 1, a company key. Number 2, a 1 key. And number 3, a Service Ontario account. The one key in the Service Ontario account is just the username or password. You may already have it if your organization accesses other government services. If you don't, it's fairly easy to create. It's just username and password. The company key, as I mentioned, it's a bit more complicated. You have to order it. It gets sent to your address. It takes, the government says officially 2 to 3 weeks. I've heard 4 to 5 weeks. Anyway, you need to wait. And if you order multiple company keys, each successive order will cancel the previous company key. So be careful about duplicating, because you may end up getting a company key in the mail that is no longer valid because you ordered another one. So with that, I'll conclude by just highlighting some of the free resources on our website. So we have a website with all kinds of information about ONCA, about transitioning to ONCA, about starting a nonprofit under ONCA. We have an interactive bylaw builder that allows you to create ONCA compliant bylaws from scratch. It is highly customizable. And it produces plain language and clear design bylaws that we actually user tested, so that when people read the bylaws, they can rapidly scan them, and it increases the likelihood that they will accurately understand what's in the bylaws. We have sample bylaws with options. We have a guide. If you don't want to create bylaws from scratch, you just want to compare and contrast. We have a guide that compares what typical Ontario Corporations Act bylaws to ONCA bylaws, and shows you where you may need to make changes. We have a lawyer directory if you need to seek out advice. We don't vet lawyers, but these are lawyers whose practice includes nonprofit law. We have a glossary of key terms, which is a good place to start. And finally, we have me. You can email me with questions. So here's the URL, and here is the email, and I'm happy to take questions. I'm sorry I went a little over. I'd be happy to stay past 5 to take your questions.
Jeff Cattell, are you going to facilitate this part of the?
Okay. Well, thank you so much, Benjamin. That was a very clear, very, very clear presentation. Maybe there won't be any questions as a result.
Yeah, there are always
give
questions.
people an opportunity. I see lots of hands up already. So David Reed, you want to go ahead?
Thank you, Jeff, and thank you very much, Benjamin, for a very informative presentation. So we are a very small not-for-profit. We have the letters patent, we have all that requirement. But I do have a couple of questions that maybe are kind of basic, but for a number of RAs, residents associations, in the course of dealing with development, which is a lot of what we end up doing, in some cases, we get a settlement agreement with the developer, which then includes a monetary component, which then comes into us. So in our case, we got a one-time settlement from a developer as part of that negotiation. And so when you mentioned $10,000 coming into the not-for-profit, is that an annual amount? Or in our case, if we had a one-time settlement agreement that was more than $10,000, how does that change, or does it change the circumstances for us as a not-for-profit under the categories that you named earlier?
So this is why I love giving these presentations, because they're always questions and they're always new. So I've never heard this one before with the settlement. That's a fascinating relationship. So what I'll flag, again, legal information, not legal advice, but the broad principle is it depends the nature of the agreement. If the amount is in the way of a gift as opposed to an exchange, then it may count towards public benefit corporations. However, if it is a contractual obligation, then it may not, for legal purposes, count as a gift, and then it wouldn't count at all, regardless of the amount, towards being a public benefit corporation. You know, it's very kind of fact specific, and if this is a typical situation that a lot of residents associations face, that might be a good candidate for all of them to get together and maybe collectively answer it once from a lawyer. It might be a good candidate for collective purchase of legal advice. But that's a bit of editorializing. The key thing I'll note about the timing, so you asked about the timing. Whether or not an organization is a public benefit corporation because of funding is determined on a year-by-year basis. So if in a given year they receive more than $10,000, for the subsequent year, they'll be considered a public benefit corporation. That's the year it affects. If they then don't get $10,000 the subsequent year, then that status ceases the following year, right? So
Okay.
it's time specific.
Okay, that's helpful because from the CRA's point of view, as you know, once you've filed, you have to keep filing again and again, even if it doesn't have that same income or whatever that threshold is in subsequent years. So that's helpful. Thank you.
Yeah, that's a separate status under CRA. Yeah, so don't even think about them together. They're totally different concepts.
Okay, thank you.
Thank you. Is Paul there?
Yes, I'm here. Can you hear me?
Yep.
Yes.
My question is if you are a co-op residents association, can you have a condo join that association? And if so, is it then fall under ONCA, or is it best to keep the two things separate?
So co-ops are not under ONCA, and the members of co-ops do not affect whether or not the co-op is under ONCA. It's all about how the co-op is incorporated. If it's a nonprofit that's governed by cooperative principles, which is a bit different, again, who the members are doesn't affect whether it's under ONCA. It's about where it's incorporated. Condo corporations are not governed by ONCA.
I thought condos were governed by ONCA and co-ops were not. So I'm a little bit confused.
So co-ops are not and condos are not.
Are not?
That's correct. Neither is governed by ONCA.
So, but I thought you said co-ops are exempt from following the ONCA guidelines. So they're exempt, but condominiums aren't exempt, I thought, from, if you're a condominium residents association, you have to follow ONCA guidelines, do you not?
Right. Okay. So thank you very much for this question. I see where where I caused the confusion. It was I made it sound much more comprehensive than I should have. What the carve-outs were. That's because in most times I give this presentation, the three most relevant things to mention are the co-ops, the business, and the federal corporation. But you're right. I didn't mention condos, and I should have mentioned condos because it's relevant to you as residents association and tenant associations. Condos are not covered by ONCA. They're categorically carved out from ONCA.
Okay, thank you.
And I apologize about that confusion.
Thank you.
Over to you, Larry Watmore.
Thanks for this, Benjamin. That was very good. Could I just ask a clarification question? If you can go back to the slide that talked about the financial review standards for public benefit and non-public benefit for different thresholds. That one there. So if you're not a public benefit corporation, so looking at that column, the information in the cell for 0 to 99,999 is the same as it is for 100 to 499,999. But I thought you said that for that second category, for the 100 to 499,999, with an extraordinary resolution, you can waive an audit, but you can't waive a review engagement. Is that correct?
You are correct that I in fact misspoke. That for 100 to 500,000, you can pass an extraordinary resolution, and you don't even need to get a review engagement if you're not a public benefit corporation. Thank you for that point of clarification.
Okay. So the only distinction is on the public benefit corporation side. If you're not a public benefit corporation, you don't need an audit or a review engagement up to 500K, as long as you get that extraordinary resolution.
That is correct. Thank you very much for that clarification. Yeah.
Christine Dingerman.
Hey, I'm from the Bay Clover Hill Community Association. Thank you for doing this presentation. It's been very helpful. I just have a couple minor questions. In the bylaws, is the chair the same as the president, or does the term have to be chair, not president?
The term has to be chair.
Okay. And then the other question that came up when somebody else asked a question, a member, can it be an individual, business, or condo corp?
Yes, corporations of any kind can be members. It has to be explicitly spelled out in the bylaws that the corporation can be a member. And in fact, the ONCA goes even further. It's corporation or other entities. I'm not exactly sure the full extent of what entities includes, but there you have it. You have quite a bit of flexibility. You just have to explicitly say so in your bylaws.
Right, that's perfect. Thank you so much, Benjamin.
Next is Cindy Wilkie.
Thanks very much. That was an excellent presentation. My question is about just the technical issue of letters patent getting updated. What will happen when you submit, if you do nothing with your letters patent, like if you think they're just fine, can you just let them sit, or do you have to refile them under this new act? And if you are making amendments to them, does the government then reissue a document to you that shows the revised or amended letters patent?
So what happens if you do nothing with your articles? So great question. So it depends, right? If your articles have all the information that's required under the ONCA already, so they specify the number of directors. If you don't have multiple member classes, right, then that doesn't need to be specified in the articles. If you do, it's already specified in the articles, so it already has all the information. Then it doesn't say anywhere that the articles need to be amended. So the ONCA transition process for an organization like that may be just updating their bylaws. So that's one thing. If your articles, however, do not include all this information, right, then everything will automatically be considered to transition, except for the specific exceptions we talked about, which are, where are they? Step 4, the updating process. Here, number of directors, member classes, and voting rights. Okay, so if you continue to have those in your bylaws past the 3-year mark, you're going to be stuck with them because you aren't allowed to change them. Because if you do change them, it can only be to put them in the articles. So that's some of the effect of not making any changes to the articles if your articles in fact don't include all the details required under ONCA. So that's the first question. The second question was, so what does the government do when you file changes? They issue what's called articles of amendment. So they're not going to issue to you a brand new set of articles. They're going to issue to you a kind of addendum that you can attach to your letters patent. If you then want to consolidate those two documents into one fresh new set of articles, what you would file is called restated articles. So it's an additional step if you want it to be a new fresh document.
Okay, great. Thanks very much.
Okay, over to Lynn Frank.
Sure. Thank you, Benjamin. I'm with the Oriole Park Association, and I have 2 questions. Thank you for your presentation. It's very helpful to us. We have a membership of, I don't know, a few hundred people, but at our AGMs, we're lucky if we get 10. So we'll never get 50% plus 1 of our membership present to approve the changes from the letters patent to the new articles. What can we do about that?
So the 50% plus 1 is just the default if the bylaws say nothing. The bylaws can set a lower quorum, and there's no minimum. Previously, there was a minimum. I think it was 2/5. Now, or sorry, that was a board minimum. So it can set either a lower percentage or a lower number of members, and it can be as low as you want. Obviously, there are trade-offs in having a lower quorum in terms of the accountability of the organization and so on. But it's open to change the bylaws. In terms of increasing participation in the annual meeting, there are tried and true methods of offering dinner. The Ontario Nonprofit Network has a useful guide for how to have an 8-minute AGM and tie that AGM to another meeting that a lot of members will be at, like some kind of gathering or festive event. And then just at the end, you have an 8-minute AGM. There are strategies like that where you can have higher attendance rates.
Okay, great ideas. And the other question is, we have a post office box as our mailing address. Is that all right to keep for the purposes of the amendment? Does that just mean we can't get the key? Or do we have to have a street address for our organization?
Yeah, the government now requires a street address. And we know that this is a problem for many different kinds of organizations. And we've reiterated this to government a number of times. In terms of what nonprofits do if they, none of the members want to give their private address and you don't have a headquarters, what do you do? So different options include giving a lawyer office or accountant's office. Many lawyers and accountants offer that kind of service, getting shared space. Sometimes I've heard municipalities offer that service. There are also organizations like the Center for Social Innovation that offer shared space. And I know they offer a mailbox. I don't get kickbacks from them. I'm not advertising. There are other organizations that offer the service too, but some kind of shared space address is possible.
Okay, all right, thank you.
Toby Tenenbaum.
Hi, thank you. First of all, as your slide on the financial, whether you need a financial review, don't worry, I don't need to see it. It should say that you pass a resolution saying you don't need to do an audit or a review engagement, and that would be much clearer than the and. I think that was part of the problem with, no, anyway. So
Thank you.
my other question is, I'm with the St. Lawrence Neighborhood Association, and our members are actually the residential buildings in the neighborhood, not individual people. So when we talk about a quorum, our bylaws we have delegates, each building can send 1, 2, or 3 delegates depending on how many units they have. So when we have a community meeting, when we have something to vote on, right now our bylaws say a certain number of delegates must be present. So I'm assuming that that's really not right. Because we could have a lot of delegates from a few buildings and we'd have to specify how many buildings have to have sent a representative. Is that right?
So delegate voting is still allowed under ONCA. This is a very interesting structure I haven't confronted before. I would have to study the matter. Feel free to send me an email. This might be a very good candidate for legal advice, because it may depend on factors such as, is it the corporations that are the members, right? Or is it the building, which is an entity but not a corporation? And what does that mean? And individuals, so not natural persons like you and me, can have representatives. So I will not say categorically as a matter of general information that it's not allowed, but what I will say is that delegate voting is possible, and that would be a good candidate for legal advice.
Okay. The only other thing I had was just a suggestion. If you don't have an address, a physical address, check with your local community center, because our physical address is at our local community center and they collect our mail and then we go and get it.
Great, thank you for that.
Okay, thanks very much.
Thank you. Okay, Tony Gardner.
Thank you, Benjamin, that was a very lucid presentation, and it's clarified a few questions I've had. I have two questions, fairly straightforward. I think one, we're the Republic Residents Association in the Young Eglinton area. We have two co-chairs, and I was interested in your definition of how a chair is responsible to our corporation. Can you tell me, if we have two chairs, can either one of them act on behalf of the corporation? That's question one.
So there's a lot of flexibility for organizations in terms of how they define the rights, roles, and responsibilities of officers. The general point of legal information is, look to your governing documents to see how the role of each chair is defined and the scope of their ability to act and bind the corporation and so on. It may say so explicitly, it may not. In general, there's something called the indoor management rule, which means that when other parties are dealing with a corporation, they have the right to assume, unless there's public information that they should have access to tell them otherwise, they have the right to assume that the person who claims to be representing the organization has the authority to do so. So they may not actually have the authority to do so. Nevertheless, because it's unfair to the other party who may enter into agreements on relying on the fact that this person they're talking to actually does represent the organization, their acts may become binding on the organization. So if there's a chair who, for example, is stepping outside of really what their mandate is, their acts may still be binding. But the key place to look for what the authority of an officer is how are their rights and responsibilities defined in the governing documents, and that's something that can be clarified in the bylaws or policies.
Thank you, Benjamin. The other question is, we never raised the subject of an audit at our AGMs, and we do not require one. Legally, would ONCA require that we build this into our minutes? We actually take a vote and dispense with requiring an audit?
So that is required under ONCA, and having an audit was required for organizations above 100,000 under Ontario Corporations Act, and for organizations under 100,000 previously, it was required to also have it in the minutes to pass that the organization didn't want an audit. So the question is, what does that mean for organizations that have not been having an audit this whole time? And the answer is that there are no ONCA police. So don't worry about that. The remedy under the Act is that members have the right to go to the court and say, an auditor wasn't appointed when it should have been appointed. So I want the court to appoint an auditor. And they may have the right to do that. Obviously, everything turns on the facts. But if nobody has an interest in going and taking the organization to court and having an auditor appointed, it's kind of a risk. It's a risk assessment. Whether one needs to go through the trouble of, passing resolutions for all those past years and so on. But so it has been required this whole time.
Okay, thank you. We just had our AGM a few days ago. Should we conduct a little bit of first aid to bring up the subject of an audit, or can we just let it go?
That would be a matter of legal advice, which I cannot give. It all depends on each situation and what the risk that someone will bring it up is, and all that kind of thing.
Thank you.
Okay, Rory Gus Sinclair.
Thank you for this incredibly good presentation. I'm very grateful for it. I have two questions, and I may have just misheard. We got letters patent in the early 2000s, and I never thought to ever amend them, and we never did. But we certainly have amended our constitution, and we've got, as we grew, we got a few more officers, membership secretaries, and so on. I don't need to go back and do the letters patent. I can just put this forward and join ONCA with the articles we have. Is that correct?
Yeah, it is. So I can't speak to your specific situation, but what can I say in general is that it's not necessary that an organization have changed their letters patent previously. Like you don't need to have supplementary letters patent.
Okay, got it. The final thing is, we were 20 years old, and I can only imagine we avoided the chaos of having street addresses for our organization, because every time a secretary changed, you'd have to tell everybody, and there'd be all kinds of wrong addresses still out there. So we have a street address. It's Shoppers Drug Mart that has a PO box in it. Is that not right?
That's an interesting question. It's so the PO box.
It
So-
said our address is PO Box 5018, 320 Bloor Street West. Period.
That's an interesting question for Service Ontario. I'd be interested to hear if they accept it or not. So this is a new policy of the government. It's not in the ONCA directly. So it's something to communicate perhaps with the government. Because it's an automated system, it may see PO Box and automatically reject it. I don't know. That's something interesting. What I've heard is that it doesn't accept cases where an address is given and a PO box is given. It only accepts when there's just a physical address. So I'm not sure what would happen in your case.
Thank you. I guess I'll have to check with Service Ontario. Thank you.
And Cindy Wilkie.
Again, very quick question, and I apologize if this was outlined at the beginning. I signed on a bit late, but it's a question for fun, actually. Will this session be posted, the recording of the session be posted?
Yes, and hopefully with the correct notice about the correction to the financial review slide too.
And is it fun that we'll post it, or will it be on CLEO's website?
I won't be on CLEO's website. I don't know
Okay.
whose website it will be on.
It'll
or
be
if
on the fun website.
Okay, great, fantastic, thanks.
It will be a big draw for fun. Carol. You're muted, Carol. Carol's from Leaside. My co-chair or co-president actually in Leaside.
It required a special touch. Sorry. I have two questions. One is when there are changes, such as number of directors, and from year to year, that may vary by one or two. But as I understand it, we have to report each year that change. Is that correct?
Yes, so anytime there is a change in the identity of the directors and certainly the number, then a notice of change is filed, needs to be filed within 15 days of that change.
And where does one file? It's maybe a simple question, but does one go to Service Ontario? Is it the Ministry of Consumer and Business Services?
So the same places I said earlier for the changes to the articles is true for other changes like a notice of change. So you can file online at the Ontario Business Registry. So you can Google Ontario Business Registry and it'll be one of the first websites that comes up, and it's run by Service Ontario. You can file by mail. And the Ontario Business Registry website has the address at the bottom of the page, and you can file through an intermediary, the identities of which are on the Ontario Business Registry website. So that's really your starting point.
Thank you. And my final question is that Jeff and I are co-chairs of the Leaside Residents Association. If I should leave the board, for example, I have the official address for the organization, for the group, which we got when we registered. So it is my street address that is the official Leaside Residents Association location.
You're not allowed to leave, Carol.
How does one change that? Would I just hand it over? But one of us may eventually. So what is that in the same way? Annually, one makes that change?
So one isn't annually required to change the address. However, it is the same process. Anytime the address is changed, a notice of change needs to be filed within 15 days. And it's in the same place. So Ontario Business Registry, or by mail, or through an intermediary.
Thank you.
Okay, a couple more names have popped up. Corey Limos.
Oh, hello. I'm from the Corktown Residents and Business Association in Toronto. Several months ago, I had to refile the list of new directors. And I had to, the form requested that there be 5 officers noted, which would have included the president, the treasurer, the VP, the secretary, and a 5th officer. And now I'm wondering, with the new, will ONCA be implementing a new form? Because now that you mentioned that there has to be a chair, will that person be mentioned? So that's my question.
So the form may have space for that many, but it was not required under Ontario Corporations Act to have 5. The only requirement was the president or the secretary. An organization may have more if it wants to, which is why the forms provide that space, but it's not required. Under the Ontario Business Registry and the new forms, there is space. I don't know how many spaces, but there's certainly more than one space. And I believe the system requires you to enter a chair. I don't know if it lets you proceed if you do not enter a chair. So that's certainly, I've had one experience with the intermediary organization where their online system didn't let you proceed unless you entered a chair. And I was changing something completely different. So but all the forms can be accessed online through the Ontario Forms repository. So they're available, and you're welcome to look them up. And you're also welcome to go to the Ontario Business Registry and kind of explore around a little. Even without a company key, you can see a bit the incorporation process, and you can get a feel for what the new system is like.
Okay, thank you.
Okay, Jim Baxter.
As far as address, you can hear me?
Mhm.
Yes, as far as address, when we filed, the government had to have a street address, which ended up being my home. And for a public address, it was allowed to be a post office box at a convenience store for
Okay.
privacy and security. So you don't have public people knocking on my door.
That's very interesting. When did that happen?
2018.
Yeah, so that's prior to the change. So this new policy about the PO box is post October 2021.
Okay, sorry.
But
so another thing that needs to be changed.
Yes.
Okay.
Yes, that is another thing that may need to be changed.
Okay, thank you.
Okay, are there any more hands up? I have been following the automatic hand up here. Are there any hands up not using the Zoom technique?
Yes, Jeff, Oliver Collins, Davenport Triangle Residents Association. I don't have that symbol on my screen for some reason, but.
So go ahead, yes.
Question. Benjamin, thank you very much. Nice presentation. We got our corporate key and I went online to register, and part of one of the forms asked for the purpose of the corporation or the organization. And there was a large drop-down menu, alphabetical, but there was like a couple of hundred options, and absolutely none of them even came close to a residents association.
Yeah.
If you don't fill that out, the form can't be submitted. So what now?
So what you're describing is what's called the NAICS code, NAICS. It's something which is required for statistical purposes. And there is online a NAICS code association, and Statistics Canada has a page on it. And what one can do is that you can go to that website and you can search residents association or a similar word that describes you, and it will show you the codes because it includes descriptions of what falls under each code. It'll show you some suggested codes that in which you may be included. So while I cannot provide specific advice about what is the relevant code, and I completely acknowledge that it's a super annoying process, the whole NAICS code things, they are not very intuitive. That's probably the place to start, to just look up at the NAICS Code Association. And
The
to
problem
see,
is, even if I did get the code, you can't type anything into that blank. It won't let you type anything in. You have to accept one of their choices, none of which apply to register online.
okay, so that's interesting. So the last time I was on the system, it did allow me to type things. If they've changed something, that's interesting to know. I do not know how to help. I would suggest calling Service Ontario. Service Ontario does help with the IT aspects. They absolutely will not give any legal help whatsoever, unfortunately. But this kind of issue, they should be able to help with.
Okay. And one
That
other,
would seem to be a big issue, given that resident associations are all going to have to do this. It may be something that FONTRA and FUN can help out to pursue that, and then let people know, basically,
Okay,
right?
so Jeff, I have gone through that experience, and I did go to that website and I searched, and I found a code 813 something or other, and that described a residents association. So it's some number like 813-681. So I came back and I tried to enter that, and it would not accept it. But when I played around with it and I reduced the code to 813, it accepted it.
sorry, what did you do?
I entered the 813, say it was 681 code. It didn't like that code. It said it was an invalid code. So I reduced it down to 813 as a 3-digit code, and it accepted it.
If I can add to that, that was my experience as well. So I'm just looking at mine now, and I have my primary activity code being 813, which
Yes.
is religious, grant-making, civic, and professional organizations. Not
Right.
exactly a direct hit, but I think that's as close as we get.
Yep, yep. It worked.
That probably is in the drop-down menu as well, if you went under that, religious.
No, I didn't see it. I didn't see it on their drop down. I had to go to the StatCan or whatever other website where you could query this NICS code.
Right.
So wasn't in
So-
their drop down.
I like Jeff's idea better, that if FONTRA could figure this out and maybe let everybody know or get them to straighten it out.
Yeah, I'm wondering, even Benjamin, whether you've got any lines there in terms of identifying it's obviously a prevalent issue. Resident associations are quite prevalent.
So
And we need to solve this.
So I've noted the issue because kind of every subsector has its own code that may apply to it. It's kind of outside of our capacity, even though this is an issue that's common to many associations. Unfortunately, it's not the kind of thing we can get directly involved in. But it is very interesting for me to hear about this experience. And certainly if people approach me with questions by email, I'll share the experiences that were shared here and the suggestion about 813. And I'll go experiment with the system a bit more myself. So thank you for sharing that.
Okay, I had one other quick question. We've been filling out our director changes annually. Is the ONCA going to replace that, or is it in addition to that?
So the system is more or less the same. It just now can be done through the Ontario Business Registry, by mailing or an intermediary, and to do it by either mail or the Ontario Business Registry, it requires a company key. And it's a good note I should have given before. Even the mail-in forms require a company key.
Right, but with a company key, you can do it online.
Correct. And it's basically the same information. I don't believe it's different information when it comes to changing directors.
Okay, thank you.
Okay, let's make this the last question. Jeff Hannemeyer.
Hello, thank you again for the great presentation. I did a quick search on the 813 NAICS code, and if I could share my screen, I'm not sure if I have that option. There is a code that comes up. Let me just see how I share my. I don't seem to have the share screen choice, but if you do a quick search, there is a code, and let me just find it here, of 8134. Which is civic, might be a closer hit than just the 813, which is a little more broad. So just something you guys can look into.
Thank you very much. That's helpful to know.
Okay, so let's close off now. It's coming up to 5:30. We have overextended our time. However, it's been extremely useful and helpful. We do want to obviously, first of all, thank Benjamin for his very clear and useful presentation. Also thank folks working in the background, Al Kiwi on the technical side, and Jeff with the session. And so following up from this, we will follow up with the slides, which will pass through from Benjamin, and a link to the fund website for other information. Fund does have a role in providing resources. I think if you go to the fund website, you'll see some quite useful information related to the mandate of fund in terms of planning and Greenbelt stuff and 413 stuff and all these issues that are going on right now. And please consider joining, especially if you are a federation and interested in the bigger issues around Ontario and its planning. And also, if there are other topics that you would like to see presented in this kind of fashion, let us know. This was really a new venture on the part of Fontra and fun, and it obviously has potential. So that's basically it.
Thank you so much for having me.
We know who you are. You did submit a registration, and we'll be able to get in touch with you. You're very welcome.
Thank you so much.
And thank you.
Thank
So
you.
goodbye, everybody. I guess we're going to have a funny evening tonight with some snow and rain and everything else.
Oh.
So I hope you took advantage of the fine weather earlier today.
Thank
Okay,
you.
bye-bye.
Thank you very much.
Benjamin.
Thank you.